Let's get more on the potential fallout from Neil Shearing from Capital Economics. Neil, I was a little bit worried when I found out about this. I mean, it seems completely incredible, or, you know, they do things very differently in Russia. We would never have such a standoff, maybe behind public, you know, closed doors, but this seems to be really the rule of the strongest. It's you know, the president and the prime minister deciding everything.
That's right. Of course, such things would be unprecedented, unthinkable in the economy, the G7 economy, for example, but not so much in Russia. And yeah, that is very much the way things are done. And this is very much about the machinations between Putin and Medvedev playing out, and Kudrin seems to have been caught in the middle. Kudrin, of course, who's been the face of stability for Russia over the past decade.
And that's exactly what I was going to ask you, because we've interviewed him many times here on Bloomberg, and he was, you know, one of the saviors, that he had very strict policies that made sense and that also appealed to foreign investors. Are we going to see a real backlash now that he's stepped down?
I think there's a very real risk that we may well do so, yes. After all, it's difficult to think of anybody who's done more to rebuild Russia's balance sheet from the ashes of the 1998 ruble crisis than Kudrin. As I said, he's very much the face of stability. He saw down all those calls in 2006, 2007, faced them down, those calls for extra spending, the spending of the oil windfall, and instead amassed rainy day funds, which of course helped Russia through the financial crisis. The big question marks now over the future direction of economic policy in Russia.
And of course, the policy of Russia in general, I imagine. I mean, you know, it brings us back to the rule of law, to all the problems that BP had. Is this really going to bring back Russia to, I wouldn't say the dark ages, but certainly at a time where investors were very worried about investing and taking any substantial risk, because the political concerns are still there, and this is just a reminder that, well, those guys are in charge and they can do what the hell they want when they want it.
I agree. In the very near term, of course, Russian markets will continue to take their lead from events elsewhere in the global economy, in particular the outlook for oil prices. But of course, this isn't the best of times to be losing your chief fiscal hawk, your most liberal voice at the higher echelons of government, and the most investor-friendly face in the government. More generally, over the medium term, there are big concerns. I think we at Capital Economics have expressed this for the past 18 months, 2 years. The big concerns that the cracks are starting to appear in Russia's resource-based growth model. Between 2004 and 2007, Russia benefited enormously from the run-up in oil prices. For the most part, fiscal policy was very conservative, cautious. There were concerns in the private sector of excessive leverage there, but the caution in the public sector helped to cushion some of the fallout from that in 2008 and 2009. Now there really are big concerns. Russia suffered more than almost any other large emerging market in the 2008-9 crisis. It's only just got back to its pre-recession levels of output, and there are the questions marks about whether growth will now slow next year as oil prices start to come off. Time for big reforms. Needed to boost investment, needs to free up the business environment, cut red tape, shift from a resource-based...
And with this political disarray, it doesn't look like we're going to get any of that.
The big problem, and this is the crucial problem that we've been concerned about for the past 2 years, is that economic reform is ultimately contingent on political reform. There are big vested interests that I think will prevent and frustrate widespread and much-needed reform in Russia, and that's a big concern.
Yeah, it is a big concern. Thanks again, Neil Shearing there, Chief Emerging Market Economist at Capital Economics.